Good morning, everybody. Good morning. It is Wednesday. It is FOMC day. It is December the 14th. You had your CPI yesterday, and again, I'm not a magician. I'm not a fortune teller. I look at the charts, look at the charts, look at the data, I look at the charts. We were getting into those 410 calls for SPY going back to last week, looking into CPI, looking into the FOMC meeting, and from the $2 under entry level all last week into this week, bam, over $5, exactly as I said. And going back again, as I posted there in the alert room, how getting out of it and getting into the December 30 399 puts, got into them 931, as you see in the alert room, and over 100% by midday. $6 already gave the alerts. There you go, guys. You got it. If you were more aggressive and were going to this week for the 16th, then you were looking at an entry of around $1.50 and you were getting $6. So you can see why I was choosing to go further out. If you went yesterday and did the zero DTEs, you were getting in somewhere around a dime to 15 cents, and you were running up to $1.37, and you were sitting on the edge of the cliff on top of a razor blade, sweating your ass off, wondering, what do I do? What do I do? What do I do? But yes, you did have yourself a 10 bagger if you made the decision that you wanted to go for that particular trade. Yesterday was not fantastic, but it was another one of those kind of tells where is why you use your data. You had your double top there at 4,100, and this is not a one-time double top. I'll bring you up here and scroll through and take you back into September. September, we hit up there at 4120, which is that little fractional gap that we have because the next day we had that CPI day where we had that massive drop. So that 4119, 4110 level, we've never made it up to that. We still haven't made it up to that level yet. And today we've got Jerome Powell. You got Daddy Powell, and Daddy Powell is there. And again, I'll move you from here over to the spreadsheet. Throughout that spread yesterday as well, got a lot of reluctancy from certain individuals from a certain demographic, which is where I always get the same kind of issues. Doing this for 7 years, it's always the same. And the 4140, 4135's 25%, got $1 on it. But again, CPI and going through that full moon phase, 2 sessions prior, we had that 3918. Today would be 4 sessions since the full moon, as I showed when I did the research going back a couple days ago. So it is still very wide open, plausible, possible, but low odds that you are going to be looking there. Again, going into the December seasonality, you are going to be looking at a drop off today. Plausible, possible, very low odds going back to and going back to that Jerome Powell's been here before. He did this in December of 2018 and he absolutely destroyed the markets. I was one of 3 people that were in the chat room on Christmas Eve and December 26th, pounding the table to buy the dip. And that was when we bottomed. We double bottomed on December 24th and December 26th. Because Jerome Powell has already been there, I do not feel, from an opinion point of view, that he will do it again. I think that he will come out today and he will have some non-hawkish, not so much dovish, but he won't be the asshole that the bears are really hoping that he could be. And bringing that into play, if we only have the lowest range of the year get matched, which was the August range on the SPX, and we have that full moon cycle 2 days prior to December being the low of the month, what we'd be looking for would be somewhere up into that 42.89 level. And today is the final day of data. There's nothing left after today. After the FOMC meeting, you might get a speaker. You might, but you're not going to get too much coming out because there's no more economic data left for the rest of the year other than some consumer sentiment numbers. And we've been a very strong consumer and very optimistic, although everybody is being brainwashed to think that we are going into a recession, which I'm not going to deny. It's going to get bad, but before it gets bad, there is still an open window for how we can be going up into that 42.25, 42.37, 42.63, and again matching that, like I showed you, 42.89, which would be the August range. And for that, again, same thing. You cannot break down below this 3,900 level. As long as that 3,900 level remains to be consistent, that's exactly show you on the other chart where that 3,900 level comes into, and it's right where your 100 moving average is, how it continues to hold right there. We're holding it right there, right around 393 on SPY, right around through 3930 over there on the SPX, and the 100-day moving average continues to hold. 50-day moving average been moving up bullish for a couple of weeks now. 200-day moving average, that's where we're having our issues with, is getting up above that, and that's again why you got Daddy Powell. Blue line here is your January 2018 high and the COVID high line. So again, we are within what is considered still that bullish upside level, how we are right there resisting. Again, I'm not a trend line guy. This is a day, a very long hourly chart. It's not accurate. If you want to get accurate, you got to go into your 1 minute chart. You got to remove all your moving averages, have it only with your trend line, and your trend line has to be exact. But as you can see there, which was another reason yesterday why we were getting out, was you came right onto that resistance line and pierced through it as we went through. Now, again, bringing all of that into play, because we have left this right up here, this 414.10, and it's exactly your 50 retrace to the all-time highs from January, there is a very strong, plausible possibility that you are going to go back up there, revisit that, repair it, and take care of all of that business. Again, not a trend line guy, not a trend line guy, not a trend line guy. But as you can see here, we broke right through that resistance line as we opened up on yesterday through the CPI, went up there, popped, broke above here on this January 2018 and the COVID high line, and then started to fade off as we went into the middle of the day. Again, not a trend that is there, and it's showing it to you. And for a bullish alarm level, you want to have that Apple 151.70. We see Apple above 151.70. You are in the driver's seat looking for that 42.25, 42.50, 42.75 level on SPX as we head into the end of the year. But for this, specifically for this, we are still technically only in a bearish ABC because we have not broken above that 41.10, filled that gap back over there to the September CPI, and we are just trotting here doing a sideways zigzag. So technically we are still bearish, and we're going to get the news out of Daddy Powell later on today, and Daddy Powell will give us the idea as to exactly what we're looking for. But to zoom out here, just so that you see what exactly we're talking about, is this. Exactly that. And what we're looking at is something in this range here being your January low and right there into your November lows or October lows from last year. That is the best case scenario, is right up there in that zone. And anything gets up into that zone, into that 42.25, 42.50, 42.75 level, you damn well better start looking at puts, and you damn well better start looking towards January, because again, you've got a nice middle of the range bullish view on the VIX right over here after that gap up because of the contract move, right here in the mid 22s. You get a move down into that 21 level, down into that lower 20, minus 20 level, and you are having your table pounding alarm that you're an absolute idiot if you're still into calls, and you better be looking in the chat room at what contract dates that I'm looking at to start shopping for puts as we start heading into the new year. I love every one of you, but I love you so much. Have a fantastic morning. I will see you in the chat room. 2:30 is when Daddy Powell speaks. 2 o'clock is when you get the FOMC meeting results. Same as we have every month or every meeting. It's been happening like that for a little bit more than 20 years.